cards
Okay,
already.
on vocabulary?
Yeah.
Okay, good. Then that's where I would spend 90% of my time.
The last day for Astros is Sunday, which I'm
Yeah.
so happy about.
Yeah, they've got 11
Like,
games
the
left,
regular
right?
season's gonna be done, so
Right.
then I can focus a little bit on that and other stuff too.
Well, yeah. They've got 11 regular season games left. I was looking at it yesterday. 11 regular
Our
season.
last game for regular season's on Sunday.
Yeah, but yeah, that's in the
That's
minute.
in the
Right,
playoff.
right in the playoffs. Right. Yeah.
Oh, we have 30 seconds,
Yeah,
20
good.
seconds.
I'm ready. We're live on
Okay.
Facebook, just so you know.
Okay.
So if you want to give out your social security number or anything like that, just go
Whatever.
ahead. Daniel's like, yeah, man, give it out. I'm just kidding. I don't even know if Daniel's on yet. He's always on early, though.
Business 1110 KTEK.
The following program, paid for by Right Path Real Estate, does not necessarily represent the views or opinions of the staff, management, or ownership of this station. It's time to get on the right path with Right Path Real Estate Radio with Tom Perry. Get the answer to your question that's keeping you from taking action and succeeding today.
Welcome to the show.
Get ready. The guy that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Tom Perry.
Hot mics.
Hey, welcome to the show. Welcome to the show. Right Path Real Estate Radio, 713-785-1817. We teach you how to run real estate as a business. There's 4 different ways to make money in real estate. Number 1, our favorite is buy and hold, being a landlord. Number 2, we like lending. Number 3, we like flipping. Number 4, we like wholesaling. All 4 of those ways are great ways to make money in single-family real estate. We teach all of those through our course, Practical Real Estate Investing. We do a weekend event. We do free events. We do the radio show free of charge. We teach people how to find deals, how to analyze deals, how to fund those deals, how to dispose of the deals if that's your exit strategy. All of those things, how to analyze the rehab numbers, all of that. But more importantly, we help you build a strategy that helps you get where you're trying to get to. So many people get started in real estate investing without a plan. Their plan is, I want to make more money. But making more money is not a specific enough goal or plan in order to get to where you're wanting to get to. In other words, if I say, hey, I want to build a bridge, I got to first decide where I want to build the bridge. So what makes this unique is that we want to start with the end goal in mind and be specific about what that goal is. If I were to decide that, hey, I wanted to, go on a vacation someplace, I would first decide where it is I want to go. Let's say I decided over Thanksgiving I want to go someplace on vacation. Well, until I actually pick the destination, it's hard to decide, am I going to rent a car? Am I going to drive my own personal car? Am I going to ride a bike there? Am I going to take a plane there? And in Houston, we have 2 different airports. Southwest Airlines flies out of Hobby. American Airlines, United, and all the other airlines fly out of Intercontinental. So you can fly, very few international flights except for now Southwest is starting to fly to Mexico, for example. And so if I decide, hey, I want to go to Cancun for Thanksgiving, then I'd probably go book a flight on Southwest. If I decide, hey, I want to go to New York for Thanksgiving, I could take Southwest, but maybe I want to go on United or American. But all those decisions will be predicated first on where is it that I'm trying to go to. So by the same token, we oftentimes have people come to us and say, hey, Tom, I want to flip, 10 houses this year. Okay, great. Well, how much do you want to make? Well, as much as I can. And people haven't even connected the dots that, let's say you're going to work off of a 20% margin. If you focus on $400,000 houses in the Houston market, in other words, that's the finished retail price of the house that you want to sell it. You want to sell a property at $400,000. Not that that's what you're paying for it. That let's say you're going to work between a 10 and 20% margin. You're going to have between $40,000 and $80,000 of profit on that price range. But if you want to try and flip $120,000, $130,000, $150,000 houses, let's take $150,000 houses, for example, you really, on a 10% margin, only have $15,000 of profit in there, and on a 20% margin, you only have $30,000 of margin in there. And we see that a lot of people will focus on trying to play small ball because they want to play safe. You know, they want to keep small amounts of money. It's not like investing in the stock market where if you buy $1 million worth of stock like Exxon and it goes down 10%, you've lost $100,000. Or if you have $10,000 of Exxon and it goes down 10%, you've only lost $1,000, right? It's not like the real estate market is typically going to fall by as much as 5 or 10%. Now, does that happen occasionally? Yes. As a result of the flood, then what happened is that values of properties, fell in certain markets. We have a property that we closed on Monday, and I predicted that the fall in value on that property was about 15%. But I knew that going in, that was what I was estimating when I was buying the property. So pre-flood, it would have had an ARV of about $500,000. So I did some math and I said, hey, I think it's probably going to take a $75,000 hit in value based on getting wet. So I started off with, hey, I think I can sell the house for about $425,000. And I built off of the $425,000 exit strategy price what my holding costs would be, what my selling costs would be, what I want my profit to be, what my construction costs would be, calculating all the costs just like you would run any other business. If I were going to open up a bakery, I'd have to figure out what's my cost of flour, what's my cost of water, what's the cost of the eggs and the salt and whatever else it is based on, the chocolate, all the things that you would go into the recipe of whatever it is you're baking, right? You'd want to know what your cost is item by item. We teach that about real estate. Now, as it turns out, I was off a little bit. I missed the market by about 2%. Now, imagine that if I didn't know what I was doing, I went in and I thought, I can sell that for as much as it was worth before the flood. It has no economic impact on the flood. A brand new person could make a mistake like that. But when you've been doing this for a while, when you're seasoned, when you're experienced at doing this, then you learn along the way what it is that you're doing. So you understand the psychology of the people that are buying those houses. And, my undergrad degree is in psychology. I have a minor in business. I've been in sales for a long, long time. I understand what goes through the mindset of someone that's buying. When we're flipping houses, one of the things that we focus on is making sure that the kitchens and bathrooms are really super nice. Most people love, really nice master bathroom suites, and they also like really nice kitchens. You make mama happy on those two things. You've done a really, really good job towards successfully flipping a house. So when we actually sold the property, we didn't get $425,000, but we got $415,000. But where we made up that extra 2%, one was in our closing costs. We saved a little bit there. The second thing that we saved in was our holding costs. Because we did so many things right on the front end, then we were still able to hit our profit margins because of the three major expenses, not counting construction, your closing costs, your holding costs, and then your profit. We calculate profit as an expense. Now, business people do that. Amateurs do not. Amateurs hope. Their plan is, I want to buy it for this. I'm going to do this much in rehab. I hope I can sell it for this. And I hope I have some money left over when I'm finished. We don't run our business based on hope. We do it based on a pro forma and a plan. If you want to learn how to be a real estate investor based on a pro forma or a plan, you can come to one of our free events. We start talking about what the mindset is of an investor and why real estate. Now, here's what I can tell you about flipping. The risk is that if the marketplace falls, it's going to cost you more to hold the property if you're going to hang on to it long enough for that value to come back. Because if it falls, like let's say I'd bought the house based off of a $500,000 ARV and then the flood happened, and then I lost that 15% of value, I would have overpaid for the property. So either A, what happens is I get rid of the property quickly and I lose money. I lose that 15%. 15% on $500,000 is about $75,000. I lose that 15%. I just write off the loss and I move on to the next one. But the good news is now I'm able to buy, the new houses that I'm buying in inventory, I'm able to buy cheaper, right? Because I know what that new number is, that it's 15% below. Now I'm taking a 15% haircut when I'm buying so that it doesn't affect me, so I bring that margin back up when I'm selling. But if you're doing buy and hold, that's not as much of a concern because that flood didn't affect rental rates. In fact, if anything, in the prices below $1,500 a month in rent, those properties lease up really, really fast. In fact, a lot of the people that were displaced by the flood, some of them moved in with other family members. Some of them actually demoed their own house, got all the wetness out, things like that. Didn't really remodel the house. They've still got the studs in the house, but they're living that way. They're not. They've got no place else to go. Some people went into temporary housing. Some people went to friends and family. Some people rented apartments, and some people rented houses. So the demand for housing rentals went way, way up. Now, over the last couple of days, I've been working with a lot of our marketing people in RightPath. And what I recognized, it was fun yesterday. I had a blast being able to explain to our marketing folks, things like that, what it is that we're doing in RightPath, how we're going to help people. And I started realizing the legacy. It's funny because our girl that does our website design, she was explaining, when I was explaining what it was doing, they go, oh my God, that's my parents. My parents are exactly who you're talking about. They're so nervous and scared about their retirement. And then the guy that does our marketing online for us, he said, you know what, that's my wife and I. We're putting money into a 401k and our IRA, and my wife keeps saying we want to put more and more and more. And he goes, I don't know that that's the best plan for our money because our IRA is 8% down last year. It's not really performing very well, so why put more in it when it's every dollar that we put in becomes 92%, 12 months later? And then our guy that does all of our videos and things like that, he was saying, I can relate to this exact same story also. So we're going to talk more on the other side of the break about how we want to change the retirement future for the average person that is getting nervous about what it is that where they're putting their money right now, what kind of rates of return. We want to compare real estate to stocks, to IRAs, to mutual funds, to all of these other investment vehicles. Because I feel like that if you understood what we know about single-family real estate, you wouldn't have your money anywhere else. Stay tuned. We'll be right back.
Mike's off.
Hi, Clint Coons here, attorney and avid real estate investor. You know the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before ever repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
All right, Tom, 1 minute.
Time is money in a real estate deal. If your insurance company is slow or non-responsive,
Tom?
you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
This is Business 1110.
Tom?
Yes.
All right, perfect.
Yeah, I know you're looking at the Facebook and still seeing that. Yeah, go ahead. You can go live.
Oops, here we go, hot mic.
All right. Yeah, I'm not meaning to make you nervous, Nikki, but yeah, so during the break I stepped out, and but I have this sense of timing because I went into our transaction office because we're actually closing deals. We closed a deal on Monday. We sold a deal. We're selling the house on Friday. I know we got 2 under contract this week. I actually contracted a house this week that the lady that's selling the house, she goes, oh, by the way, I've also got this really nice pool table that I just want to throw in and a boat. And when I hear a boat, I'm like, oh, man, it's probably some rusted out John boat. It's just like not even worth anything. And then I got a picture sent last night, and I was like, man, that's a pretty nice boat. It's got a boat and a trailer, and it hadn't been running a year, but I'm like, it's I was expecting just this really nasty boat. And I get this, it's like, wow, okay, so we're in the house buying business, but every now and then somebody just wants to give you a boat. I used to love the TV show that was like a bartering show, and they'd start out with some random item. Nikki, have you ever seen that show? Start out with some random item in their house, right? Like an electric knife or something, whatever it is, right? And they go, okay, I'm gonna go out and find somebody that I can exchange. And they get on Craigslist and on Green Sheet or whatever, right? And on the internet, and they somebody that has something that they want, and what they decided is what they want is, and they would describe it, and then they would do all these trades. And obviously they were trading up almost every time. But you give somebody something that they want, and you're trading for something that you want, it doesn't have to be of equal value, right? I mean, I could trade something that's worth $5,000 to somebody that has something that's worth $10,000. But if they really want the thing that I've got that's only worth $5,000, I mean, oftentimes be like, well, I mean, it's not really fair, but yeah, I'll do it. It's like, it's the convenience. And that's really how we look at what we do in real estate. In Houston House Buyers, the value proposition that we offer is it. And so what's funny is so many new investors, they come in with the wrong mindset. The mindset they come in is, hey, Tom, can you tell me how to find those like super motivated sellers? In fact, I had a Facebook question asked just recently. And I have to say I've been a little bit busy. For those of y'all that don't know, Jason and I, we were business partners on 5 different businesses. And so we're kind of busy, running 5 different businesses. And I can only imagine what it is. Elon Musk has probably a lot more than 5. And Sir Richard Branson, he has, probably way more than 5. And so, but, Jason and I, we've been partnered on 5 businesses. And he's been an amazing partner. I've had other partners in the past, not so amazing. Jason's been an amazing business partner. But about 6 or 7, maybe 8 weeks ago, he came to me and said, hey, look, I want to out on 3 of those businesses. So put together, a structure, and I was able to buy them out. Officially today, I'm, 1 week. Been in this an entire week in Houston House Buyers, Right Path, and Quality Property Solutions. But what's been amazing is, to see when we're out there buying houses, the value proposition that we bring is that we're providing a convenience. We actually buy houses from people who value time over money. And I know some people, when they get into what I call a poverty mindset, they value money over time way more than they value time over money. What I mean is they're willing to trade their time for tasks that you would never, ever do those tasks if you were paying someone. So in other words, once you do the calculation on what your time is worth, and then you ask yourself, would I ever hire somebody at that rate in order to do that? Most people say, well, no, I would never do that, right? Yet we do those tasks and wonder why financially we're not where we want to be. It's interesting to me that most people don't know how to value their own time. In other words, they've never really done the math. It's really simple. In fact, one of the things we do on our 2-day weekend event, it's all day Saturday, it's all day Sunday. It's from 9 to 5 on Saturday, 9 to 5 on Sunday. One of the things that we do on that weekend event, so towards the end of the day on Saturday, we say, look, going to give you a homework assignment. Want you to go home and figure out how much your time is worth. I first ask people, before I give the assignment, I ask people, hey, raise your hand if you know how much your time is worth. And invariably, somebody will raise their hand, oh, it's worth $1 million an hour. I'm like, really? I'm like, anybody paying you that? Really? I'm like, it's great that you want to dream like that, but that's a dream. It's not a reality, right? So then I get the question like, well, how do I really do that? Well, first you got to decide how much you want to make a year. Like realistically, are you a $200,000 person? Are you a $100,000 a year person? Are you a $50,000 a year person? You have to decide for yourself how much your time is worth based on the value that you bring to the marketplace. In other words, if you're going to be a $200,000 a year person, you better be bringing $200,000 a year worth of value to the marketplace. You got to believe that you bring that kind of value to the marketplace. Otherwise, you won't earn. You may find some fool to pay you that for a short period of time. They'll figure out pretty quickly you don't bring that kind of value to the marketplace. And that's not a good strategy long term. Long term, you want to build a strategy where you can do something duplicatable and repeatable over a long period of time, right? One of the things I love that Jim Rohn used to say is that don't wish that things were easier, wish that you were better. And the real point of that message is that the beauty in the human experience is that we can always improve our value to the marketplace by increasing our education or increasing our skill set. That's how we add value to the marketplace. It's not just going to work, getting a job that's going to pay you a lot of money. It's that if you want to make more money, you've got to either improve your skill set or you have to get educated. One of those two things. Now, once you decide what your hourly rate is worth, all you got to do is you got to work backwards from, I want to make, let's say, $200,000 a year. Let's start with $100,000 a year for simple math. So you just simply say, okay, instead of counting 52 weeks out of the year, nobody works like between Christmas and New Year's, allegedly. And then, going to take a week off during the summertime for vacation. Now, just as an aside, we buy a ton of houses the week between Christmas and New Year's because a lot of times people want to sell during that week so that they're not on the, they're not going to pay taxes, or for tax reasons, they want to take their profit in the previous year, not the next year. All of those kind of things. We buy a lot of houses between Christmas and New Year's. The other reason why is because we're one of the few people working during Christmas and New Year's. A lot of times people stop marketing. A lot of our competitors stop marketing in Thanksgiving and then don't market again until after the new year. And we continue marketing all through that time period. So as a result of that, we have eliminated a lot of our competitors, and we're the only one out there buying houses. We buy a ton of houses in the month of December. A lot of people go, December's the slowest month. Yeah, for you, because you're not working. And so back to, if you want to make $100,000 a year, let's say you're going to work 50 weeks out of the year, that's $2,000 a week. You want to make $200,000, that's $4,000 a week. et cetera, et cetera. You want to make $300,000 a year, you got to be making $6,000 a week to be on pace to make $300,000 a year. Now just divide how many days a week you're going to work, or how many hours. If you're going to work 50 hours a week and you're going to make $100,000 a year, so 50 goes into 2,000, it's $40. So you need to start doing tasks that are worth $40 an hour or more. Here's the problem is, you may only have 12 hours a week worth of $40 an hour tasks. So then what ends up happening is you end up filling up your time with things that aren't $40 an hour tasks. You end up filling up your time with $15 and $20 an hour tasks. You buy a rental house and you go paint the house yourself. Because, essentially at that point in time, aren't you the most expensive painter on the planet at that point? If you think your time is worth $40 an hour and you're painting a house, would you ever hire a painter for $40 an hour to paint a rental house? I don't know if, I can kind of hear it through the airwaves. There's a phrase that we use sometimes in our weekend event that says, if I ever throw a rock into a pack of dogs, there'll typically be one of the dogs that barks. That's the dog just got hit by the rock. So sometimes I feel like I lob these sayings of truth, and I feel like somebody in the audience just go, oh man, that was a revelation for me. I just feel like they just barked, that I just hit them with a rock and they just barked. So if you want to be able to go from $40 an hour to $80 an hour, from $80 to $120, or from $120 to $200 an hour, so that you are creating a legacy for your family, you've got to grow your skill set, or you've got to grow your education. And you've got to stop doing the things that have kept you where you are. So many times when people come to us, they're focused on what it is that they're doing. They come to us to learn the transaction of real estate. And of course we teach that. But what I'll tell you is that's the easiest part of this business. The transaction's really easy. It's as easy as baking a cake. And I have to tell you, baking cake's really easy. The hard part of it is understanding the transaction as a business. In other words, when you start thinking about, hey, I'm not going to just bake a cake, but I'm build a bakery. I'm going to build a bakery that bakes 1,000 cakes a day. You would think about the whole process completely different. You would, the recipe and the ingredients and all that, all that's important. You got to know that, because that's the foundation of what you build around. But you never start a bakery that's going to bake 1,000 cakes a day by baking one cake in your kitchen and then going to 2 cakes the next day and then going to 4 cakes the next way. That's not how most bakeries, I guarantee you, that's not how the bakery that bakes Wonder Bread works. That's not how they got started. So we're going to talk about comparing real estate to other investment vehicles on the other side of the break, so you can stay tuned. Thanks for listening. Did I catch you off guard, Nikki?
You did.
I'm sorry. Are you snoozing? Are you not producing? I don't have you for the whole full hour. Are you doing something else?
Mike's
I'm just playing with you. I felt like that was a good break point. I know I was about a minute off. Sorry about that.
You're good. You're good.
It doesn't happen real often, but what happened to the music?
Selecting a
Oh,
foundation
okay.
annual product
Lord,
repair
today,
or
my
maintenance
goodness.
Man, you are off on the dials or the digits or the switches, huh?
foundation repair industry as a whole.
I gotta get it
doesn't
together.
carry
That's all right.
liability, Nor is it regulated. However,
So magic number for the Stros, that's down to, is it 8? After the win last night, I think? It's
I
down.
heard it was 7.
Oh, is it 7? Okay.
Maybe I'm wrong.
No,
I
you know what, I
People talking downstairs. so
Actually, I
maybe
saw
I'm
it 2
wrong.
games ago, and it was 9. And I know that they lost 1 game and they won 1 game. So I didn't know if that moved it down to 8 or down to. So, but I also didn't see because they're ahead of the Athletics, right?
Let me tell you what you're missing.
Yes.
Yeah, so I didn't know if the Athletics lost. So they must have. You know, I get really excited
Talking
about.
about that game yesterday. I guess they came on at 9 something last night because they were. I guess they're in LA still. or-
Yeah, right.
Classes every Tuesday morning and evening. For more information.
Yeah, you know what I was getting excited about is of the last 11 games. I think 7 of the last 11 games are against 2 of the worst teams in Major League.
Yeah.
Yeah.
Just the
We
sound
ought to
of
go
the
seven.
Diamondbacks aren't very good, and then Seattle, I hear it's pretty good.
Seattle's not bad, right? But they're playing the Orioles, who are terrible. And the Blue Jays. They've got like, I think they play their last four against the Orioles, and they're in last place
Oh, really?
in their
That's good
division.
then.
Yeah, and then I think they're playing the Blue Jays for 3. So those are the last
today?
7.
They're off on Thursday, and then their last games are Friday, Saturday, Sunday.
At Minute Maid, right? They have some. Don't
Yes.
they finish on the
Well,
road,
that's
right?
For the regular season.
Oh, is that
Then
right?
the playoffs start.
We
I
understand
think.
that investors aren't just looking for a number
Let's see.
of
Yeah, they won
forget.
7-0 last
October.
night.
No, where
comprehensive analysis of the
Like
market.
the 3rd or something. We got the
Next-gen
schedule.
call
I gotta look at it.
713-346-9911.
Yeah, it looks like so they've got the Angels for
Check us out
3
online at
because they've got one more game tonight tonight with the Mariners, and then 3 games against the Angels, then 3 against the Blue Jays, then 4 against the Orioles. So they end Sunday the
Oh, okay,
30th.
So just the last home game on
Yeah,
Sunday. I was thinking this was
right.
The last game
No,
period for the regular season.
No.
To help you with repair costs. Jet Lending is your
Yeah, because they end Sunday against the Angels, and then they play Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday. They play every day for 7 days, all away. So their last 7 games are away.
Okay.
But they're against the 2 worst teams, the Blue Jays and the Orioles.
That's good.
Yeah.
Investment property, then call Fast Track Remodeling at 832-742-9992.
I was surprised they dropped that first one against the Mariners, that 4-1 loss.
Yeah, I was too. They came back though, man. It sucked.
Right.
Whether it's a flip, rehab, or a
Yeah, I think
more
their best team they're going to play of the next 10 games is the Angels, and they're not stellar.
Give us a call today
Yeah.
at 832-742-9992.
And then I think we'll finish with the second best record in the major leagues, behind Boston.
You could lose a deal.
Yeah,
like
Boston, they were
Quick
losing
turnaround
yesterday
on
to the
quotes,
Yankees. I don't know what
and
the
the
final
agency for
score
that is
was.
Benchmark
Yeah.
Insurance Group of Texas. The team at Benchmark understands the investor mindset.
See it.
They know what you need and when you need it. It's there for you. Call Houston's.
Yankees won 3-2.
experts. Benchmark Insurance Group of Texas. 281-569-4355.
I have a feeling it's going to be Yankees and Astros in the American League Division Finals.
The new TRID rules and closing on time.
And then I think the
They're
Astros
good,
can
but
beat the
then
Yankees again.
They make me nervous.
I know.
Legacy Mutual
I know.
Mortgage, and we have mastered
Yeah.
the 30-day close.
I think, honestly, even though the Red Sox got a better record than the Yankees, I think for the playoffs, the Yankees are almost always a better team than the Red
Yeah.
Sox.
Give me a call today at
we're coming back.
713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
This is Business 1110.
All right, here we go. Hot mics.
Hey, welcome back. Welcome back. Yeah, I love that song. And it's funny because I watched a documentary about the Lynyrd Skynyrd band and how they got started and all that kind of stuff. Pretty fascinating. So anyhow, a lot of good old Southern rock and roll. And a lot of people recognize 2 of the main songs, but man, they had so many hits. It's amazing. So back to real estate. Okay, so here's the conversation I've been having with a lot of people recently, and it really has to do with single family as compared to any other investment. In fact, I would challenge people that if you look at single family buy and hold, that if it's done right, and we see a lot of people, I go to events and people tell me all the things, reason why they've tried single family buy and hold in the past and why it didn't work. And there's a right way to do single family buy and hold, and there's definitely a wrong way to do it. But if I believe that if you do single family the right way, that there's no better investment anywhere in our country. Now, I haven't studied, other investments in Europe or Australia or places like that, but in our country, I don't believe that there's a better asset when you compare. There's 2 things to compare. What's my potential reward? And then what's my potential risk? So think of that like a teeter-totter, right? So as the reward goes up, typically what happens with risk, it goes up as well, right? And ideally, we'd want it to be more like a seesaw teeter-totter where reward goes up and risk goes down, right? That'd be ideal. if you can make reward go up as high as possible and risk goes down as high as possible, ideal investing strategy. However, it's not the way it really works in the real world. Normally, as reward goes up, risk goes up. And what's fascinating is I think that people oftentimes through greed really get excited about the reward side of things and rarely ever really look at the risk side of things. So what I'd say is if you compare the stock market, let's say I'm going to go buy $150,000 worth of stock. And I buy it today. Today's September the 19th, 9/19/18, right? 9/19/18. And I call up my broker and I say, hey, Mr. Broker, I want to buy $100,000, let's call it $150,000 of Ford stock. I would love somebody to be able to call me up that knows the stock market really, really well. Somebody that knows the stock market as well as I know the real estate market and could look me in the eye and say, hey, a year from now, Ford is going to be up 7%, 10%, 15%, whatever that number is. Versus that it could potentially be down 5, 7, 10, 15%. What I know is if I buy Ford stock right now, I'm buying it at market rate, and I'm speculating on whether or not it's going to go up in value. Now, can Ford produce more Ford stock? Absolutely. They can issue more shares. They can go to to their shareholders and say, we're going to issue more shares. So they could dilute the value of my shares just by, selling more shares off, right? They could also do share buybacks, increase the value. But most people don't actually look at intrinsically what's the value of Ford when they're buying Ford stock. I'm not picking on Ford. I'm just saying any stock that you would pick. Now, I would weigh that the risk of it going down is about equal to the risk of it going up. It's about a 1-to-1 ratio in terms of reward versus risk. Because now, can you do get fancy and do some puts and some options or all that kind of stuff could you set limits? Yeah, of course you can do all those things if it starts going in, but it just means that you may be called out of the stock and force a loss. You could limit your loss, but it's going to force a loss, right? But then the question is, how much leverage do I have on that stock? If I'm going to buy $150,000 of the stock, do I get any leverage whatsoever? And the answer is no. I have to pay $150,000. I get no leverage. Do I get any depreciation on the stock? And the answer is no. Do I get any special tax benefits owning that asset? And the answer is, if it's done through a 401k, I can do it, or an IRA, I can defer some tax liability. But I'm not eliminating that tax liability, right? Now, does Ford pay a dividend? I'd have to check. I don't really know. I'd love somebody to be able to call me up and say, hey, there's this particular stock, and it pays a 12% per year dividend. I'd love you to call up your broker and go, I'd like to buy a stock that's paying a 12% per year dividend. Now, why 12%? Well, because when we teach at our free event, one of the things I love about single-family real estate is the cash flow that it generates. Now, this doesn't work in California. This doesn't work in New York or New Jersey. It doesn't work in the coast, on the east or west coast, where real estate is crazy sick expensive. Buy and hold investors in those marketplaces, they're speculating on the appreciation, and 9 times out of 10 they're right. The value goes up. So what ends up happening is that they buy a property, they pay $400,000 for it, for example, and it negatively cash flows. In other words, they have to put money into the property every month to pay their mortgage, their property, their insurance, their property interest, their taxes, their insurance, and their principal on the mortgage, right? The PITI. And so let's say they're paying $3,500 a month for their PITI, and then they're only getting $2,500 a month in rent. So they're short $1,000 a month. But they're able to park a large chunk of cash, and oftentimes people are just paying cash for these properties, getting the cash flow, and then that property goes up to $500,000 in value in the future, or $600,000. They sell it in the future, and they make their money that way. But they only make the money when they cash out. Here in Houston, what's unique is that we can actually cash flow along the way. In other words, we can put, let's say, $30,000 down on a $150,000 house, and we finance $120,000. Now we're getting a 5-to-1 leverage. But when we put $30,000 down, my principal, interest, taxes, and insurance is going to run me, let's call it $1,050 a month. It might vary based on your interest rate or based on the taxes for the area, but let's just call it $1,050. I'll build in some extra margin. Let's throw in an extra $50 if I'm off for a little bit. And let's add management, because one of the big complaints that I have, that I hear from people go, oh, I don't want to deal with single family because I don't want to deal with toilets and tenants and what if they tear up the house, all those kind of things, which are really all management issues. And when that typically happens, and I'm not going to say it doesn't happen as you scale, that it doesn't happen every now and then. But the trick on that is outsourcing your management, because when most people get started in real estate, in order to save the management fee, they manage properties themselves. And what I know is anytime you do things for the first time, you're not going to be very good at it when you get started. Or you may not be good at it even after you've done it for a good while, because there's lots of things, there's lots of things that I've tried for a long period of time, and I've just never got very good at it. Like I've tried tennis, and I've hit some tennis balls and all that. I used to be a very competitive racquetball player, and then I tried tennis a few times. And racquetball, you hit it really low, and I was really good at that. And then I developed a really good tennis shot into the bottom of the net as a result of racquetball. And so being great at racquetball made me not so very good at tennis. And so I could practice tennis a lot, and I just didn't get a whole lot better because I practiced racquetball even more. Now, imagine that you're practicing being a property manager and you're not very good at it. Wouldn't you want to outsource that? A lot of times people ask me, Tom, I just bought my first rental. When should I consider getting a property manager? Now. I would get one on the very first house that I ever bought. I wouldn't ever want to manage a property myself because I don't want to get the phone calls from the tenants. I don't want to have to worry about toilets that are leaking, things like that. Now, one of the ways that you eliminate a lot of those things, when you buy the house, you fix all of those things on the front end. In fact, one of the things that we'll teach you in our 2-day weekend event is that if you buy the property, we recommend that you buy it with hard money, and they'll actually fund, if you buy it right, the purchase price plus the repairs. And then what will happen is that you can, after you get all the repairs done, and they'll give an appraised value of the property, not based on the condition it is when you're buying the property, not an as-is appraisal, but as a predicted future value appraisal. They're going to tell you, hey, this is what the house is going to be worth 30, 45, 60 days from now. When you do these certain things, then we know what the value of the property is going to be based on the comps. But then you're able to refinance out. It's called a rate and term refinance. You're able to refinance out the purchase price plus the repairs. And now you limit your amount of money in the deal. But let's say you just put 20% down. That includes repairs and everything. You buy a retail-ready house that doesn't need repairs. Somebody's already repaired it for you. It's just move-in ready. You put $30,000 down. You have property management, principal, interest, taxes, insurance. Let's say your payments are $1,200 a month, and it rents for $1,500 a month. You're making $300 a month cash flow. And you're paying down your mortgage every month, but it's not you paying it down. It's your tenant paying it down. When they make that payment every month, so what happens is your principal that you owe on the mortgage keeps going down. When your equity in the property keeps going up, because typically a house in Houston that's below the median home price or below replacement cost, it's been averaging about 7% appreciation. And I can hear people saying, well, Tom, 7%, man, I think I can do better than that in the marketplace. Yeah, maybe, but you can't leverage in the marketplace. Maybe you get 10% in the marketplace, but if I've got $30,000 in a house, but I've got a $150,000 house, I'm getting 7% on the $150,000. That means I'm getting $10,500 in appreciation, but that means that's a 35% rate of appreciation based on the $30,000 that I have in the property. So I don't know why you wouldn't get excited about a 35% rate of return. Show me a rate of return that gets anywhere close. And imagine I'm off. Now, you get 35% appreciation. You get 12% on cash flow. That's a 47% rate of return. Now, my disclaimer is past performance doesn't equal future results. I'm not promising that your results may vary based on your skill set, experience. I'll give all those disclaimers, right? However, what if I'm off by 100%? And it's not 47%, but you get 20% rate of return. Here's what I know is, I've been in businesses in the past that through legislation, it eliminated an industry. I used to own a wholesale health insurance agency. When Obamacare passed, I was out of business in 30 days. I know what that feels like. And then I figured out, hey, what is it the politicians invest in that I hadn't even considered before? And almost every politician is invested in some way, shape, form, or fashion in real estate. Why would they write any legislation that's going to harm their own investments? Think about that. Are you investing in the things that people that control our economy are invested in? We'll talk about this a little bit more on the other side of the break. I want you to stay tuned through the break. Thanks for listening. Right Path Real Estate Radio. You can give us a call, 713-785-1817. Hey, Jason. Good morning. How are you? Man, I'm getting text during the radio show from my family. I'm like,
just the sound of that word makes people cringe.
About stuff that really
Anderson
matters.
Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at AndersonAdvisors.com, and don't forget to tell us you heard about us at Right Path Real Estate.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is
How much later did y'all stay yesterday after I... Pretty good while?
Group of appraisers specializing
yeah.
in investment real estate.
I got super excited about that meeting. Could you tell?
Just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give next a call at 713-346-9997
yes.
or check
yes.
us out online at nextgenappraisals.com.
This is Business
yeah.
1110.
Yes, you're right. mm-hmm.
All right, hot mics.
That pause is just a little bit more than is like comfortable. Like, wait, did it stop? Anyhow, welcome back, Right Path Real Estate Radio. So we're talking about comparing a single-family house versus the stock market. Over the next couple of weeks, we'll talk about other investments. And what I recognize is that when you start talking to people about single-family real estate as an investment vehicle, most people, they know what a single-family house is, but they have no idea what it's like to build a portfolio of single-family houses. And if they knew what I know about single-family houses, they wouldn't put their money anywhere else. In fact, if they knew what I know about the stock market, they wouldn't put their money anywhere else other than single-family houses. In fact, I know a lot of brokers that over the years have confided in me and go, you know what? The average broker really doesn't know what the market's going to do. And the reality is I feel like that most of the people that are invested in the marketplace are just pawns to the market. In fact, the market goes up, nobody can tell you why. It goes down, nobody can tell you why. I've seen some real estate gurus on Facebook over the last, probably year and a half, 2 years, talking about crypto. How great of an investment, crypto is. How we're just killing it, making so much money in crypto. And I'm like, yeah, why? Why is it going up? Nobody can answer that. Oh, it went down. Why did it go down? Oh, I don't know. If single-family real estate were to rise or to fall, we know why it's going up or going down. It's really simple. In fact, what's fascinating about single-family real estate is that we know that next year the cost to build a home is probably going to be higher than the cost to build a home this year because we know that building materials go up and so does labor costs. So through that inflation of the cost of building going down, unless something's going to cause the cost of building to go down, then replacement cost is going to continue to rise. And as long as the replacement costs continue to rise and you're buying properties, people talk about real estate in the big picture scheme of things. Well, you have to recognize what's happening in $1 million homes is not the same thing as what happens in $150,000 homes or $160,000 homes. Homes that are below the median home price act differently than houses that are 5 times the median home price. Those are totally different markets. But the real estate market's doing this, or the real estate market's doing that. Which real estate market? What I'll tell you is the real estate market in El Paso is not the same as the real estate market in Houston. They're not necessarily El Paso, but you get down to let's say Kingsville. The real estate market in Kingsville is going to be different than the real estate market in Houston.
1 minute.
So if you want to learn more about real estate investing, what you need to do is head over to our website. It's rightpathrealestate.com. We've got lots of great information on our website. It's how to get started. It's what to do first. And one of the things that I'd recommend that you do is take a look at our free event that we do twice a week. We do it the Thursday at noon. We do it every Thursday at noon. We also do it every Tuesday at 6:30. So go over to rightpathrealestate.com. That's rightpath, R-I-G-H-T, pathrealestate.com. In real estate investing, we'll teach you the how, we'll teach you the recipe, the formula. Not only that, we'll teach you what it is that we're doing. We'll say, come on, hey, let's do this together.
20 seconds.
And we've built the team of appraisers and inspectors and contractors and all the people that you need, the lenders, the money, all of that in order to do this.
10 seconds.
Come on in. The water's fine. rightpathrealestate.com. Thanks for listening. Tune in tomorrow. Thanks, guys.
All right, Tom, mic's off. Have a good one.